What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we did see a strong bounce off of critical support, but we are still in a bear trend and there remains a lot of downside risk. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we were up 2.53% and we did bounce off of that strong support at 416 and we did hit strong resistance at 428. Now the first thing you need to understand is that we are in the bear trend, so we are still looking for the possibility of a lower high getting rejected at resistance and continuing to retest support and possibly even breaking through support and making a new lower low. So your most critical resistance you need to watch is at 428, 433.5 and 438, and we're getting a lot more bullish if we start breaking out above the 440s. Any of these resistance levels could still be a lower high before we form another lower low, so please understand that concept. Every bounce from here needs to be treated with skepticism because we do have the bear trend and we are more than likely going into a prolonged period of weakness in the market. Now that starts to change if we start closing above the 440s on SPY, with the first bullish breakout being above 440 and then the close above 443 should confirm we're breaking out of the bear trend. We can't get bullish any sooner than the bullish price action confirmation because the trend is your friend and right now the trend is still bearish. So look for rejection at any of these resistance levels and the bearish breakdown being the close below 416, which means we'll more than likely start trending down to fill the gap at 400, and below 400 we do have a price target at 390. There's still the possibility of very strong support right around 410 if we do break below 416, so watch that support level as well. Treat this market seriously and understand this is a very volatile market, so even though it is a bear trend, there's still the possibility you get very impulsive bounces to the upside before we continue to go lower. Jumping over to the NASDAQ 100 QQQs, we were up 3.5% today and we had another very impulsive bounce off of the support level around 318, and we're very close to retesting the strong resistance around 334. Remember, there's the possibility of a lower high before we make a lower low, so you're looking for a strong rejection around 334, 341, or 347, and we're looking a lot more bullish if we start closing above 347. If we get rejected at any of this resistance, you're looking for a retest of the lows around 318, and if we break below that support, you're looking for a quick trip down to about 303.5. So continue to respect the strong bear trend until we get the bullish price action confirmation of a breakout to a new high above 347. In the Dow Jones, we were up 1.88% today, and the Dow Jones did bounce off of that support level at 333 and did test resistance at 340, but we did not break above that resistance. So just like the rest of the indices, we do have the bear trend and there's the possibility of a lower high before we come down and hit that price target at 326. And that price target at 326 is from the confirmed double top, which we did break below the neckline. We could either get rejected around 340 or the 50 EMA around 344. And we're getting a lot more bullish if we can close the gap and start breaking out above 347. Don't get bullish until we start closing above 347 to 350. And get a lot more cautious if we get rejected at resistance and start breaking through support at 333. On the Russell 2000 small caps, we were up 1.87% today, and we did get that oversold bounce when we were way below the lower Bollinger Band, and we did come right back up to resistance at 191, and as you can tell, we did not close above that level. So just like the rest of the indices, we do have the bear trend, and we're more than likely forming a lower high before we come down to the next support level at 183. You're getting a lot more bullish if we can start closing above 203 and 208, but not any sooner than that. So treat everything as a lower high while we do have the bear trend until we get the bullish price action breakout. If we break down below support at 183, you're looking for the next price target at 170. On the ARKK ETF, we were down 1.39% today as we continue to see a very strong bear market in the ARK ETF. And at this point, there is no reason to expect ARKK to go any higher until we get a bullish breakout way above the 60s. So continue to expect ARKK to continue to trend down towards $0 with strong support at 40. On the VIX, we were down 5.1% today as the VIX prints a perfect doji candle, still getting rejected right around 30, but we still do have a lot of bullish momentum and the VIX is still very elevated, trading well above 24. So be extremely cautious of a bear market while the VIX is above 20, and especially cautious while the VIX is above 24 and 30. We're getting more bullish if the VIX closes below 24 and we should be in a bull trend by the time it closes below 20. But right now the VIX is saying risk off and continue to be cautious. On Bitcoin, we're currently up about 1.39% and Bitcoin's trading right around 40,000, which is our resistance because we did break down through that level as support. We're getting a lot more bullish on Bitcoin if it can close above 42,000, but not any sooner than that. If we get rejected right around this resistance around 39 to 40,000, you're looking for a retest of support at 37,000. And below 37,000, you're looking for very strong support at 30,000. If we do get a bullish price action breakout above 42,000, you're looking for the next bullish confirmation on a close above 45,000. On NVDA stock, we were up 7.42% today as NVIDIA finally starts seeing that dead cat bounce, and we are looking for a retest of resistance at 210 before we go any lower. If we don't get a retest at 210, that is extremely bearish, and you should be expecting to see a very quick trip down to that price target at 150. However, if we do start breaking back above 210, you're getting a little more bullish in the short term for a retest of 223 or the gap close at 230. And you're not getting bullish in the longer term until we start closing above 244. So even though this is a very strong bear trend in NVIDIA stock, there is still possibly going to be more upside in the short term before we start to break down and continue lower. If we get that lower high and we get rejected from resistance, you're looking for the next bearish breakdown below 184, and it should start seeing expedited selling below that level as we continue to trend down towards 150, and we don't have the earnings catalyst until later in May. On Tesla stock, we were down 0.45% today as Tesla got way too oversold and was way below the lower Bollinger Band and did test that support zone right around 828. And so far, we did bounce back within the Bollinger Bands, but we did get rejected from resistance at $900 yet again. Right now, this is starting to look like a bear flag below 900, so I continue to tell you to stay risk off on Tesla stock while it's below $900, and you're not getting more bullish until we start closing back above 975. So below 900, you're looking for support at 856, 828, and if we break below 828, you're looking for a retest of the lows right around the 760s. We're developing a bear trend and we clearly have bearish price action, so continue to be risk off while we're below 900. On Apple stock, we were up 4.52% today as Apple did break back above resistance at 162, but we are still trading below that critical bullish breakout level at 168. So from here, you're looking for either a retest of 168 as resistance or the bullish breakout above 168 for a confirmation of a bullish breakout to close the gap at 174. If we get rejected at a lower high below 168, you're looking for a bearish breakdown below 162 and then a retest of support right around 156. And if we break below 156, you're looking for a quick trip down to retest the lows at 150. We have a lot of bearish momentum, so don't get bullish on Apple stock until it starts closing above 168. On the financial sector, we were up 1.28% today as we are bouncing off support, but we clearly have a bear trend and we shouldn't be getting bullish on the financials until they get back over the 50 EMA. On the industrials, we were up 1.13% today, but we still have price action below all the moving averages and we still have a bear trend. So don't get bullish on the industrials until we get back over that 50. On the healthcare sector, we were up 1.38% today with price action still below all the moving averages as we continue to develop bearish momentum. On the energy sector, we were up over 3% today and we did close the gap at 76, but we're still getting rejected below resistance right around 77.5. From here, this could be the lower high before we make the next leg lower to finish out the correction in the energy sector. So jumping back over to the S&P 500, you have to remember there is a lot of bearish momentum in the market right now. So you need to be extremely cautious if you're taking long trades until we get confirmation of a bullish breakout. You should be buying at support and selling at resistance or shorting at resistance and covering at support because this is a very volatile market and there's going to be plenty of whipsaws and plenty of traps. Remember, the trend is your friend, and right now we have bearish momentum and bearish trending across the market. So you need to have a bearish bias until we get a bullish price action breakout. Use proper risk management, and there's no reason to be taking on too much risk in a volatile market. So have a very strict trading plan and just stick with it, be consistent, and continue to expect a very bumpy ride. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. You can see in 2008, even though that was a very gruesome bear market, Bank Trade Alerts beat the market and had a very positive return that year. If you're looking for more information or want to subscribe to Bank Trade Alerts, you can find out all of the information in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.